Good evening, everyone. This is Ron Wheeler, manager of options trading here at VectorVest, and it's my pleasure to bring you tonight's special presentation. It's never too soon for income. Now, why is this so important? If I were to go out and ask 100 people and say, hey, why do we work? I may hear responses from, well, it gives me a sense of purpose, or it's my contribution to society, or I get to help people. But the most responsive answer I would get is because it's a paycheck. It allows me to live comfortably, it rewards me, and most importantly, it allows me to save for retirement. Now, the end goal of all of our paychecks is to get to that magical moment of retirement. And when can we actually retire? We can retire when we're bringing in enough returns from our investments that exceeds our monthly expenses. Now, hopefully by the time you reach retirement age, your monthly expenses should be lower anyway, because we've had all those years to pay off all of our assets. However, by learning to bring in income, we can shorten this dramatically. If you're still working like I am, that extra income provides an opportunity to do more things. Send my children to private school, dance lessons, karate lessons, swim lessons, a bigger minivan, if you will, nicer house. It's never too soon to start an income stream, a second income stream that can allow you to retire earlier and before you retire, live a much happier, healthier life. Now, what I'm going to introduce to you tonight is a bulletproof system that you can do in little as 15 minutes a week. Now, why is that important? That's important because there are so many stocks out there. There are so many different option strategies. There are so many different levels of analysis. There's all studies and indicators and data. A lot of people get overwhelmed. They say, I can't find trades easily. It ends up taking them a lot of time to try to source a trade. Well, what we really want is we want that income, but we want it fast. We want it reliable. We want to do it where we don't have to spend 8 hours in front of our screen every day. We want quick, reliable returns. Now, before I get started in showing you the trade I want to feature tonight, I want to give you some information about good, reliable returns. Over the last 5 years, you could have started with as little as $5,000. Now, as I said, it's never too soon for income. So even if you're just starting out using a $5,000 trading account, over the last 5 years, we placed 258 trades. That's only one trade per week. We had 160 winners, 98 losers, about a 61% success rate. And at the end of 5 years, the balance in your account would have been about $12,690. Over that 5 years, that's a 153% ROI, around 2.5% per month on average. Now, $5,000 is just the starting point. If you had 10,000, 15,000, 20,000, 30,000, you can extrapolate the data out even more. Now, the question is, how do we get there? Well, the first thing that you have to do sort of a strategic mindset shift around is we're not looking for home runs. Home runs look good on paper. I can show you trades that made 2,000 or 3,000%, and that's great. But when we trade for income, our goal is simply to get on base. It reminds me of the movie Moneyball. Brad Pitt, Jonah Hill, they're sitting in one of the meetings with all the scouts, and they're looking at all these players, and the scouts are scratching their head. They're saying, why do we even want this guy? He hits like 240, he's way past his prime. And Brad Pitt is explaining the concept of these guys get on base. If they get on base, the more runners we have on base, the more runners we will ultimately score. Yes, we're not going to have a guy that hits 50 home runs a year, but if everybody gets on base and does it a lot, we are going to win games. That is the goal as an income trader. I'm not shooting for those home runs. I'm shooting for consistency. And that's the idea behind income. Now, how does this work? Well, first off, we delve into what I call the 5-step process. We look at the overall market direction first. As an income trader, we have to trade in the direction of the overall trend. Now, typically what I would do from there is go to stock finding. I would find a good uptrending market or a downtrending overall market, and I would find stocks that trade in the direction of the trend. Well, to make this a lot easier, we're going to just say trade the S&P 500. That's it. Market's in an uptrend, we're going to trade the S&P 500 in a bullish pattern. The market's in a downtrend, we're going to trade the S&P in a bearish pattern. Option selection. It's very easy. We have a objective rule-based system for expiration, deltas. That helps you with trade setup. The selection of options become easier because we're only doing the S&P 500. And then as far as the management repair, it's even easier. There's no repairs. We exit the trade at 50% profits. We exit the trade if it goes too far against us. There's no repair. The trades last at most 7 days. On average, these trades last about 3 to 4 days, but the longest they can last for you is 7 days. The system is designed for you to place one trade per week. Now, I talked about this a few seconds ago. I said, listen, the market has trends, right? The trends can go up, the trends can go down. Don't fight the trend. Don't try to go up the escalator when it's coming down. Don't fight it. Trend trading is probably the easiest thing and the highest accuracy trading you could do. So we're not going to fight the overall trend. Even when the market gives day-to-day signals that maybe it's not a good place to trend trade, we're never going to fight the overall trend because statistics and probability are on our side. And here's why. Again, as the market trends, stocks and the S&P and the Dow, all of those things are likely to continue in the direction of the trend. Now, let's talk a little bit about probability. And probability is very important for you as an income trader because we're not just going to take a trade that has a 50-50 chance of success. We want to build probability into these positions. That way, I can make income if my direction of the market is right. I can make income from the direction of the market if it's wrong, or even if the market goes sideways. Now, during an uptrend, and again, we're looking at S&P options. During an uptrend, the stock or the S&P is more likely to be here. Now, I'm saying that the market is right here at this black dot. What I'm saying now from a probability perspective, it's more likely to be up, sideways, or even down a little bit. Now, as long as the market stays in that green area, we can actually profit from our trades. That to me is the definition of an income trade. One where you can make money even if your overall market direction is incorrect. Now, from a pure statistics standpoint, we're going to use a base level of 65%. We're going to sell options that have a 65% chance of success for us. Now, as you saw earlier, my 5-year back testing results were about 62%. There's always a discrepancy between, book method probability and real life probability. But when those things are so close to each other, we really, really like that. We're going to set up a trade on the S&P 500 that gives us a base 65% level of success with a 35% chance of losses. Now, what that looks like again, we're going to do this over 11 days. We're not going to do this over a course of 2 months, 3 months, 4 months. As I said, these trades typically last about 3 to 4 days at most. A couple of them have gone all the way to 7 days, but what we're doing is we're looking at the probability of the S&P 500 over the next 11 calendar days. And we're going to select an option to sell that has a 65% chance of success. That gives me a 35% chance of a loss. Okay? Now, what happens if the trade does lose? Now, most of us are familiar with stocks. Let's say you buy a stock at $100 a share. I would hope, whether you're using Profit Locker or you're just using a method of stop, maybe you buy a stock at $100. You put a 10% stop loss in. If the stock drops to 90, you simply walk away and exit the trade. Options are the same thing. A lot of people don't realize that options trade similar to a stock. I can buy them in the morning, sell them 3 days later. I can actually sell or write a contract in the morning. I can exit the trade 4 or 5 days later. If ultimately our direction is incorrect, we are simply going to exit the trade and move on. If I place a trade on Monday and on Thursday the trade fails, I exit, I take a small proportional loss, and the next Monday, I get right back on the horse and get a new trade off. Now, it's the same idea during a downtrend. When the stock market or the S&P is in a downtrend, it's likely to be continuing to move down. However, because I want to put this trade together with some probability, I need to make sure that I have room to be wrong. Again, that's the definition of an income trade. So if, let's say, the market is right here, I want to make sure that if the market goes down, I win. But if it goes sideways, I still win. And if it goes up, I still have a chance to win. And if it goes up too much, I simply exit the trade and wait for the next week to add a new one. Now, again, we are projecting this probability over the next 11 days. Now, when I do all my trading, when I do all my tests, I do these trades on Monday. Could you do them on Tuesday? Could you do it on Wednesday? Sure. But all of these trades are designed to be done on Monday because I like to do it at the beginning of the week. So again, if you can't do it on Monday because maybe your Monday is a little bit busier, don't feel that you can't do it on Tuesday or Wednesday either. Okay? Monday, Tuesday, and Wednesday are really the key places where we want to do these trades. Now, when I talk about this, I always like to prove it. Now, earlier on in the presentation, I mentioned that, over the course of 5 years, 145% returns. That's all great. But what I want to actually do is show you the trade log report. Now, this is the year 2017. Now, I could have gone 10 years. I could have gone, 7 years or 8 years. I chose 5 because it's a good round number. Now, what you're looking at over here on the right is the results of the trades for 2017. 2017 was one of the best years for this S&P 500 approach. If you'd have started the year at the beginning with $5,000 in your account, at the end of the year, you'd have had $2,692 in profits. Now, that does not include commission, but the average commission for these trades is about, if you're trading one contract, you're going to pay $3 or $4 for commission for these trades. So over the course of a year, if you place 52 trades, your commission's probably going to cost you, anywhere from $150 to $200 depending on what you pay. So commission is not all that terrible. Now, in that year, the one thing I want you to watch the most, and I want you to watch this as we go through the presentation, because an income trade, of course, it has to be statistically sound. It has to be profitable. But another thing that it has to be is good risk and reward. I want you to take a look down here. The average loss for the trade, or the average win, was $120. The average loss was around $135. So you have a loss and a gain that are very, very close. And you can see that the average days in trade was almost 3. We had 9 consecutive winners at our longest, and we had 3 losers as our longest streak. A thing to keep in mind is simply this. You will obviously have some losers. Now, what I will tell you is, if you're going to try to trade for income, you really have to stick with the approach. Too many people I see get involved in an income approach, and listen, there's drawdown. There's always going to be some drawdown. You're never going to have a line of profits just continuously go like this. That is statistically impossible, okay? So if you look from January into December, you're looking at things and saying, wow, that's some great returns. But let's say that you started trading here, and over the next 2.5 months, you're basically break even. You might say to yourself, well, this is an income approach that doesn't quite work. Well, then what happens is you miss the rest of the year where you would have actually gone from maybe a $5,000 account when you started late to maybe a $6,500 account. You have to keep it consistent. Now, let's bring in 2018. 2018 wasn't as great of a year. If you remember the market in 2018, the S&P took a pretty big pounding that year. Well, guess what? We still had about a 56% winning trade accuracy. Our average gain was about 157, and our average loss was 154. Now, at the end of the year, you'd have made $1,000 on your $5,000 account. Okay? You're still making money. Now, you could also look again at this and say, well, if I had started in January and then by, March, I'm not really making any money, I'm just going to sit this thing out. Well, then you miss the rest of the year where you would have made money. You have to stick with this. You can't just do one trade every once in a while. Now, in 2019, we had a great year also. But even if you look at 2019, we had an area of drawdown here. Okay? Had you started trading in, let's say, June, by the end of September, you're sitting there saying, I don't even know if this thing's worth doing. But it is. You have to keep going even through those periods of drawdown. Now, the beauty of this system is the drawdowns are not generally significant. I think the most drawdown I've seen is about 7 or 8% overall. And even this year, you can see the average gain 140, the average loss 147, 63% trade success. Now, all of these numbers are based on one contract at $5,000. So if you trade one contract to the S&P, you need a $5,000 account. Now, when I say that, you actually need less money to trade one contract of the S&P. However, because we work with the processor, work with the idea of hitting singles and not trying to be home runs, we're only suggesting you risk 3% of your account per trade. So that's why you can see that my average losses are right around $150. I've scaled the trade based on how much I believe you should have to do this. Okay? Now, the next slide you're going to see is kind of a conglomeration. It's 2020 and 2021 together. I forgot to separate the years when I was doing my trade logging, but I just kept them all in 1 year. That 2-year rate, we had 102 trades, 60 winners, and 42 losers. Our average gain, right around 149. Our average loss, right around 160. Okay, 9 consecutive winning trades. Our most consecutive losers was 5. So you're going to take some losing trades, of course. At the end of that 2-year stretch, you'd have made $21,42.50. So remember, if you had a $5,000 account at the beginning of 2020, at the end of 2021, your $5,000 account is now worth $7,142. So what you see is a system with a sustained period of growth. It's a simple system. One trade, one rule, one graph. Now, if you do this right, you can increase your ante. Your account would have actually doubled in mid-2019. So you'd have gone from a $5,000 account to a $10,000 account. At this point, you could have upped the ante and actually started trading 2 contracts. So let's kind of walk through that real quick. This is 2017 again. At the end of year 1, your account would be at $7,692.50. Assuming you started with $5,000, you made $26.92 that year. So at the end of year 1, you're at $76.92. At the end of year 2, your account has now grown to $87.10.01. Okay? Now, in year 3, right about in June, our account size would have hit $10,000. At that point right there, you are clear to up it to 2 contracts. Now, what if you had 2 or 3 losing trades in a row on 2 or 3 on a 2 contract position? Do we go back to 1? No, you have enough built up to where you can now sustain a 2-lot position even if you draw down a little bit. So for the remainder of that year, had we started a 2 contract position, you were up about $1,200 for the year at that point. Okay? Now, by the end of the year on 1 contract, you'd have made probably another $600 or so right there. Now, had you doubled, you'd have, instead of made $600, you'd have actually made about $1,200 instead. So now you take that information and you have another $1,200 in profits. We can take it to 2020 and 2021. Instead of making $4,142, you're basically making about $4,300. So at the end of 2021, your account has now grown to approximately $15,350. Remember, I'm not promising you home runs here. I'm promising you a safe, low drawdown, consistent system for income. Okay? Now, at the end of 2021, your account would be valued at $15,350 instead of the $12,690.01. You went from 153% return to a 207% return simply by upping the ante and doubling the number of contracts when you doubled your account. Well, guess what? Now in 2022, since you have $15,000 in your account, you could actually trade 3 contracts. And you could up your size once more. So this compounds, this builds as your profits build. All right, I want to introduce you to one of our clients, Cheryl. Cheryl had done a lot of options trading before. She was inconsistent. She said she tried it all, spent a lot of money on education, but she still didn't feel confident. So I want to bring into some of her words into this to talk about her situation, how she was able to kind of turn her situation around. Cheryl wrote to us and said, I'm retired and needed to try to build my IRA up. I tried it all from options, futures, stock, and some day trading, but it wasn't consistent. I lacked confidence and felt like a failure. I had decided to stop trying and give this account over to my professional investment broker when I came upon a webinar called the Options Paycheck. Over the years, I've spent a small fortune on education and wondered if I should invest in this course. The fee was something I thought I could handle, but what really sold me was that it had a money-back guarantee. So I dove full force going through the pre-recorded videos before the live classes even started. I knew about credit spreads, but was very fearful because I had heard so many horror stories about them. Well, that's changed after taking the Paycheck course. I loved every minute of it. And what she's referring to is, as option sellers, a lot of people look at that and say, Ron, I've had these before where I've had 9, 10, 12 winners in a row, and then one losing trade comes in and wipes everything out. That's just a broken system. As you saw with the S&P system I showed you so far, we have about a $150 average winner with about a $150 average loser per contract. So these trades are set up so you would never have that happen. I always tell my students, I've never had a trade wipe out 7 or 8 winners, even 3 or 4 winners. Why? Because I would never take a trade that could happen. So we put that into the system for good money management. Now, she said, I started sim trading the SPX 11-day trade, which is what I'm showing you tonight. I did very well and decided to test the waters in my real account. I've really surpassed my expectations, and well, Ron doesn't have to reimburse me for the investment because I've tripled my investment since I started trading live on October 18, 2021. Thanks for the opportunity to learn a very profitable strategy. I now have major confidence, am sleeping good at night, and I'm eager to get up in the morning to see what awaits me in the trading world. Just overall excitement. Thanks for the opportunity to learn a very profitable strategy. So that is someone who is actually doing it. Okay, what you just saw was the 5-year back testing, the 5-year returns, the 5-year trade logs of what we've done. Now you're also seeing a real student doing this approach. Now, if this is something that you're interested in, we are launching the Complete Options Paycheck class. It starts next week in February 3rd, I believe. And it is a complete A to Z system, which will teach you to be an option seller, to generate that income. Now, the Paycheck system is around trading essentially everything. We're going to teach you stocks. We're going to teach you the S&P. We're going to teach you the foundation of options. Even if you've never traded options before, you can have success with this. We're going to teach you bullish trades, bearish trades, neutral trades. I'll show you how to find trades, how to select the indexes, how to make sure you're putting the trades on correctly, not doing too much risk. This is a complete A to Z system. And as Cheryl said, we also offer a 100% money back guarantee. Now, the course is delivered live. Again, we start on February 3rd, and this course is delivered live. Or if you cannot view our live sessions that start on Thursday, February 3rd, we also have recordings out there that you can do as well. Okay? Now, what I've done is I've put this into a nice package for everybody, really so they can go through the course and get a lot of success with it. Now, tonight I focused on what I call the SPX Paycheck. As part of the Options Paycheck course, I teach you this SPX Paycheck. And in fact, there's actually 2 trades that you can do depending on your risk level and also depending on how much time you have in the market. Now, this has been a very successful trade of ours here at VectorVest for many, many years. That's why I showed you the 5-year run of it, because that's really when I started doing it here at VectorVest. I wanted to show the consistency of the strategy. We have a lot of clients that do this SPX trade. And again, it's something that I've added to the Paycheck course because it's been very popular. Now, I also include mastery support sessions. So as we go through a module each week, we also get together and we talk about the module. I'll show you your homework assignment, we'll answer questions, and I just want to make sure that before you're ready to move on to the next level, that you understand everything that we've taught. And again, if you can't watch these live, it's okay. We have recordings of all this. You can view them anytime you want. We have a private Facebook community. I know people feel indifferent about Facebook. Some like, some don't. But you can come onto this thing anonymously. It's a nice peer group of people doing paycheck trades. I give you 7 weeks access to my members-only group coaching. I'm the URS instructor here at VectorVest, and I do 3 classes per week, SPX, credit spreads, debit spreads. You'll have guest access to those where you're really going to see me implement these Paycheck principles. If you don't have Options Pro, or maybe you're on a trial of VectorVest, we'll make sure that's continued. Through the 7 live weeks of the course, you'll have access to both Options Pro and VectorVest 7. If you don't have an options selection tool or an options analytics tool, Options Pro can help get you started. At the end of the course, if you'd like to keep it, great. We'll let you know how you can do that. But if not, you can use these in your broker as well. If you're new to options and you're still a little bit worried, we also have the Options Foundation course. This is something that you can watch on your own. And again, if you've never had success with options before, or you just don't know enough about them, this is a nice little streaming course that you can watch as soon as tomorrow if you wanted to. And it'll get you up and running before the class officially starts. So let me kind of throw the whole package together for you in the Options Paycheck. What we've got is an Options Paycheck course, live and recorded, plus you'll have 12 months access to the curriculum and the materials, the SPX Paycheck, the Mastery Support Sessions, coaching and trade recommendations through the 7 weeks, VectorVest and Options Pro for the 7 weeks. Again, if you already have VectorVest and Options Pro, we won't add that, but if you're on a trial of VectorVest, we'll continue it. If you don't have Options Pro and you're a VectorVest member, we'll give you Options Pro for those 7 weeks. The Facebook group and 12 months of QA, and then also those Options Foundation courses in case you need to get started. That all together has a value of about $1,600. Now, what I'm going to do is I'm going to spend the next 7 weeks, February and March, and I am going to teach you how to do this. Roll up my sleeves, work with some clients, and I'm going to hopefully get you to the place where Cheryl is, having more confidence and being able to sleep at night and finally producing an income. If you go to optionspaycheck.com, you will get a lot more information. It's $9.95. That price goes into next week. After next week, it goes up. This is an early bird promotion, so make sure you get out there and take advantage of it. I want to thank all of you for viewing our strategy of the week. I hope you enjoyed it. And I hope to see all of you in our Options Paycheck course. Thanks again, everybody, and good night.